I'm Chris Petkas. I'm a general partner at Contrarian Capital. We're an early stage venture fund focused on the digitization of small business, how we're seeing innovations on Main Street and boring businesses. A lot of the thesis comes from the fact that these friction points and pain points have existed for a very long time. And while enterprise level solutions have kind of made their way across a lot of the B2B and B2C enterprise, we haven't seen a whole lot of it trickle down into small business and boring businesses. Small business is defined by under $50 million of a business, as well as, I believe it's below 100 employees in the US. And so when you look at those statistics alone, 45% of small businesses from US GDP, it is comprised of 45% from small businesses. So a major mainstay in our economic backbone. And so that's something that we're extremely passionate about addressing, investing in, and seeing how we can bring a new generation of tech native owners into the 21st century to enable the businesses to be on par with what we're seeing in and around the coasts and the concentration of technology centers in the US. The thesis is really we look at it across 4 different areas, mostly the silver tsunami that's happening with baby boomers, right? The youngest baby boomer will be eligible for retirement starting next year. They own over 65% of small business in the US. A lot of them don't realize that they have an exit strategy or an exit route. And so when we have people from Gen Z, Millennial, and Gen X taking over these businesses, as one of the prior speakers on the panel, Alex Jakowski, spoke about before, a lot of the time we're seeing businesses and we're seeing companies that are addressing problems where their only competitor is a pen and paper or a fax machine. So we've been extremely passionate about that. And we take a little bit of a differentiated take with our portfolio companies and with our investment thesis on how do we democratize access to our portfolio companies with our audience. And so something that we see really interesting there is, what does that Venn diagram look like with audience and company or tooling or capability?
So I think we should start about how we actually started working together, because it's a cool story. We weren't actually fundraising, and Cody found us. I think it was on Twitter, on X.
Are you guys all familiar with Cody Sanchez? What she does? She's my wife. We talk about boring businesses. We have a media company. We have about 9 million subscribers across channels. We hit about 120 million monthly views across short, medium, and long form content.
And and that audience is actually extremely valuable. The way it worked with us, so basically what we do is we pretty much allow anybody, we open the gates to billboard advertising to literally anybody. And I think that's why Cody found us, because this was finally a tool that allowed small and medium businesses, mom and pop shops, early stage startups to get literally any billboard in the world, and beyond that without selling half of their assets to be on a billboard. And we met in Miami and we did a video. Cody did a video with us, and she actually had an ad that went on a billboard in downtown Miami, and that was like $12. And Cody was like, holy shit, like I actually didn't believe it's gonna cost me $12 and be in downtown Miami on a big ass billboard. So we'd be interested to invest in you guys. And we kept talking. Of course, when it came from Cody, we like, yeah, definitely, we want to have you on our cap table. But then the video went on YouTube, and literally the requests that started to come to us, not only from clients, we got a ton of small and medium businesses that actually started advertising in Arkansas. We got people from Asia and from the Middle East that watched the video and they wanted to buy billboards and go into the business. We got a guy from Canada that had 3 digital screens, and I just want to list them in your platform. I think fractional buys on billboards makes a lot of sense. And basically, if you can believe it, it's been like what, 2 years now. We are still getting traction from that video. We are still getting emails and phone calls 2 years later from that video. And coming back to the topic, it's how in today's day and age, right? There's capital everywhere. If you have a startup, it's not that easy or not that hard to find capital, but it's getting harder and harder to just use capital. If you get a VC, I think as a founder, I think that VC should actually be your partner and help you scale. It's not just about the check size, because as building a company, you need to actually blow up a lot of doors, especially in legacy industries that are stuck in very old models. And from my point of view, that's what the VC should also help you with, break that door, get that client, get that partner. And that's the value that Contrarian Ventures brought to us. But how do you see it? Because you guys have a totally different thesis than any other VC that I've met.
Yeah, so what we did is we kind of really started to A/B test it with Fund One, and we were getting such really interesting deal flow, especially from companies and businesses who wanted to access the SMB market and understand it a little bit better. So from there, we started writing small checks, and then we realized, oh my goodness, by our inherent flywheel that we have, right? We're a content and media machine. So we're going to highlight the future of entrepreneurship and businesses and SMB. Obviously, the companies that we partner with or own part of or invest in makes most sense for us to fuel our content side of the house, right? So we always have content based on how the all of the interesting just progress all of our portfolio companies are making. So from that point, what we look at it is from a perspective of, oh wow, audience is a really big thing. And so what we've done is we've been able to define an audience much better. And I think this is the way that future of commerce is occurring, especially online. So are any of you familiar with either Morning Brew or The Hustle? Two very notable newsletters, two significantly different outcomes. And I would argue one was a 10 times better investment for the acquirer than the other. And I'm talking about The Hustle with that. I don't think it's disclosed the amount that it was sold for, but it was, let's say, the bottom half of 8 figures is what it ended up being sold for to HubSpot. Now you look at that and you say, oh my gosh, a newsletter with 4 million subscribers, is that really worth it? Absolutely. Because what HubSpot ended up doing is they found an avatar. They found where their customer base was most likely associated. And that was with The Hustle. And what they did from there is they said, okay, we're going to use this targeted audience segment in order to be able to, one, sell our existing products, but to two, A/B test and understand and communicate with our audience better to provide product. So they also used it as a product dev tool. All make sense? So the payoff from their investment was assessed, by the way, like this is rumor, in 21 months. They made back their 30 some odd $1 million in 21 months based on the conversions that they got solely associated with The Hustle. You saw Morning Brew being sold as well to Business Insider. That was a larger platform to reach more people with a news segment. It did go for a little higher of a multiple, but again, at the end of the day, they used it for a very different reason. And so what we look at is conversion. Where is conviction? Where is conversion? Because I think we can all agree, any entrepreneurs and founders here, that where do you want to go to where your customer is, right? That's how you get them, that's how you acquire them, right? So how do you lower customer acquisition cost? You go to the area where you already have that captured audience that is corralled. So when we look at avatars, we say, okay, this individual lives in this part of the United States of America, or this part of the country, or this part of the world. They're in this age demographic. They're associated with these industries. They, are a pet owner. They went to this type of university. Like, we try to characterize them to give them names. Like, we have a Kevin, and we have a Kristen, and we have a Bobby, and we have a, Janelle, right? So we look at these from very specific areas. And then we look at that and then we reverse engineer it. So we look at it and say, okay, where are these avatars going to be captured across, the different channels, right? And so what that enables us to do is be partners with our portfolio companies to help them with go-to-market strategies to identify where they're going to find their high conversion customers.
Since you mentioned the go-to-market part, I'm curious, who here is involved or has been involved with like the fundraising part for their business or startup, or so a few people who have raised. Who here is involved with the go-to-market strategy for whatever company they're working with or for or whatever? So for the people who have raised money, have the people you've raised money for or the firms that you have raised money from been helpful with your go-to-market usually? Because that's not, it's kind of, I hear one yes over there. I'm curious to talk to you later because I think you're the exception. And most people being like politely saying, maybe. But with the that's what I think the missing piece is in regards to what you said, Chris. Because normally in our experience, and we've talked to a lot of startup friends and we've raised money, it doesn't happen. Like companies that give you money usually stop at that. Like, hey, I gave you money. I negotiated usually pretty tough on your valuation, and have a nice day. And don't forget to send me an investor update from time to time. Otherwise, I'll get mad.
Regions, just to let you know. I love them.
Yeah. Some don't. Yeah, and some are even more aggressive. So I'm interested because like Bogdan was saying, and like you were saying, we feel the value is definitely with go-to-market, because otherwise, if you don't have a valid and a scalable go-to-market strategy, you'll always have to be raising money because you're always going to be paying Google or Facebook or TikTok or whatever else for every single purchase, right? Even because you're going to purchase a client, but then you're going to have to reconvert them at some point, right? Because they will fall off your funnel and you have to go back. So it's a situation that most companies have. If they're not putting money into marketing, they're not getting anything out of it, right? Whereas the best companies manage to build their audience or access this type of audience. So how much do you think for startups that are raising money or building now, what do you think their kind of strategy should be when it comes to go to market? By that I mean, should they be building their own audience, and where should they be looking at this type of audience? Because you have a lot of experience with this, so I'm curious what you can share based on building this type of audience for yourselves.
Yeah, so what we look at it from a perspective, especially with the companies that we partner, is are they moving to within an industry where there's little to no competition, right? I have never seen anything like Blind Spot at the time that we had invested, and I still haven't, frankly, right? So that's a step one right there, right? You are providing a completely different service that has existed across others, right? That makes it much more easy to communicate a value proposition, right? There might not be comps, right? Because the technology hasn't existed before, but we can take a look at what it means for somebody's marketing capability, right? Then what we look at is we try to understand, okay, is this company going to open up marketing or open up other channels for the businesses for which they serve, right? Are they going to, yes, it's a small business, but that doesn't mean their radius has to be small, right? That doesn't mean their impact has to be small, right? Their circle can expand well beyond that into, nationally. And so when we look at that from an audience perspective, we try to put ourselves in the shoes of the founders to say, okay, what does your ideal customer look like? And then you have to build that backwards, because oftentimes, especially what we see now with a lot of capital flowing into the market, is people saying, oh, technology doesn't exist for this, I'm going to put some in it. Like, that is not a good customer acquisition strategy, right? Like, good luck with your lifetime value by just throwing tech on top of something. So we look for purpose-driven products that have a customer in their minds, that have a person that they can think of, that they know on the street, that they know by name, that they can recall, and that's it. And that's what you obsess about, is what those individuals look like. What are their behaviors? You need to understand and get in their own loop, right? How do they live their lives? How do they live their days? We have some companies to that extent to where they're in the home services business on the venture side of the house, and they're going to farmers markets to access their clients for home services and renovations. It's like everybody else is like, oh, throw Google SEO at it. Like, let's do some Facebook ads. Like, let's find how that goes, right? Frankly, it doesn't hit the mark. So you need to get into the thought process of the person of which you're trying to target, which was my life for about 10 years prior to entering into the business world. And so that is what I really, really look for. And I think that is probably the strongest growth trajectory that we see of those companies, is like, not only do you obsess on it, but you know what they look like. You know what their behaviors are. Like, you're walking down the street on South Congress in Austin, it's like, oh, that looks like a Kevin. Like, I know what our avatar is, right? It's like, he's probably dressed like me. He thinks he's blue collar, but he's not. He's, he's trying to build a business that, is affect change to a certain niche, right? Does that answer your question? Awesome.
In terms of fundraising and different approaches and different types of funds, you guys, and ever since we started talking, were focused a lot of, can you guys actually make money? And you invest in, you call them boring businesses, but all of these businesses have a huge market potential. It may not seem like that in the first couple of days of looking at the business, but like everything that's in your portfolio is opening up tremendous markets that other unboring businesses are not going after. So when it comes to fundraising, why do you think so many VC funds invest or find sexy businesses that either don't have a market or will probably not have a market in the near to middle and sometimes long-term future? I mean, let's look at X. X never made a profit in its life for, I don't know what, 15 years or something like that. That doesn't mean it's a bad business, but the question is, what's the difference? Why so many go after these unicorns or whatever we want to call them, and why so few go after actual businesses that generate or can generate money?
Yeah, I think you have VCs or investors that look at it in a binary way, like what is the problem or what is the capability that this is going to bring, and what is the problem that this is going to solve? I think those are two very different things that we don't think about in our day-to-day life, right? There's some incredible space technologies that are being put into orbit where you're like, yeah, that's going to be a capability we probably need in the next 8 years, versus, oh my gosh, there's no vertically integrated software for the horticulture industry. Like, that's an $8 billion TAM. It's like, dude, no, it's not. And then you start doing the research and understand, oh my gosh, this is a long-standing problem that has existed for a very long time. So we kind of look we do a little bit more of a traditional private equity identification point about it, right? Is we look at it from these segments of, what are these problems? And again, an easy one is, what's the enterprise level solution that exists that hasn't touched SMB, that hasn't even gotten close to broaching any of these necessary, friction points or workflows? And so what we look at in our founders is similarly, we don't do pre-product, we don't do pre-revenue. Because if you don't have revenue, you're worried about your product, you're not worried about your customer. In my honest 2 cents, right? And I could be proven wrong about that later on down the line, but that's just kind of the way that we like to think about these things. And so when we look at it from an investment standpoint, it's, there's a ton of people throwing a ton of money towards a ton of really interesting things that will absolutely help humanity, that will help people in such a big way. But it's like, why don't we just fix the problems that we know exist? And I think of it almost like in a relationship, right? If I'm like, hey, Cody, I'm going to learn to be a 10th degree black belt. And she's like, that's cool. I'd rather have you just clean the dishes first though. And it's like, oh, got it. Like, why don't we fix these long lasting friction points or pieces that we need to have to fundamentally keep us afloat versus going to expand? Because frankly, I think we know our niche. And we obsess about it.
Speaking of these low friction points, you see a lot of startups, and a lot of startups pitch you, and you scout a lot of startups. What are some of the easy to fix issues that you see in startups today, right? Like the clean the dishes part.
So I think from a principal perspective, when you look at it, I think there's a lot of capabilities that will do two things, and that is bundling or unbundling a workflow. For example, in fintech, right? A lot of the mechanisms for investment are pretty vertically integrated by institutions or large companies, right? What are these areas in that entire workflow that we can start to pluck those out where the individual can have the ability to change what they want? It's like Mac versus PC, right? Mac, I don't have to do anything, it updates for me, the viruses, all that stuff. Whereas on a PC, there's a little bit more modification and customization that the ability of like an experienced technical person has. And so the other piece, so that's unbundling piece. I'll go on that one. And then when we look at bundling, okay, how do I aggregate fragmented pieces of a workflow to have one consistent tool that enables me to go from start to finish as much as possible, right? So it's imagining like a vehicle. I'm not going to come to you with an engine and be like, great, now it's on you to find the person to build the chassis, the steering wheel, the wheels, the body, and the windows. I did my part. We think of it more so as like we need to deliver vehicles. And so how do we do this? And again, that's usually from a platform play. So like these guys, they do everything from the beginning, from customer experience to delivery to design. I mean, by the way, we work with a lot of our portfolio companies internally, especially. These guys did an incredible job for us for Cody's book launch in Times Square that put us on like NASDAQ, had a digital truck rolling by that we trolled Blackstone and BlackRock. And I mean, it couldn't have been more seamless, right? Digital billboards all over New York City for that day. And so it's something like this where we say, hey, here's what we want. Here's the design going back. And these guys figure it out significantly on the back end, right? What are those friction points that you're completely eliminating by doing vertical? Because if we wanted to do that individually, we probably have to go to a broker and who deals with that particular display, and then that person has to okay it, and then 6 different people have to okay to the design that it's not offensive or it's not inconvenient or it's not going with something else. They have to deconflict it. No, these guys manage the time, they manage the payments, they manage the design, they manage the coordination, right? So that's what the world is in terms of we think about it in bundling and unbundling.
Yeah. I think so. I was thinking about this. That's kind of why we started the business, because we had this exact issue, and we realized there's 2 ways of doing out of home now. One is you pay a huge premium to have someone figure it out for you, but the multiples on that premium are crazy. Like you're paying 2 or 3 times more, or you go through a lot of headaches to figure it out yourself, and you waste a lot of time for something that may not be a main priority for you, because maybe you're testing it out, maybe you're early stage with that idea. So based on that. But when it comes to audience, because I love the conversation about audience, my personal belief is that we're in an age where, because it's so easy to build a product now and it's so easy to kind of develop an MVP, I think distribution will be everything over the course of the next few years. So how do you see... I know this might be a tough question because you can't really add a number to it, but if you were to kind of put a valuation on the audience that a business has, what do you think kind of a multiple would be? A business that has 1 million loyal followers or one that has 100K, how do you evaluate something like that?
Yeah. So talking earlier back to the hustle, they had a pretty good high conviction audience. They knew what type of person was on it, and they paid a certain amount for each email subscriber, right? Or they paid a certain amount for click-through rate, right? Like, okay, you have 70% click-through rate, meaning 70% of your audience clicks through the entirety of the newsletter. Great, so I'm going to put a premium on 70% of your audience, but in order to buy it, right? Whereas I would not look at the same type of news. Like, I would rather have 5 million with an 80% click-through rather than 10 million with a 40% click or 30% click through, right? Because there's also the growth trajectory, and that shows what your like attachment is, right? Lifetime value, not to be confused with attachment. So you look at it in the power of conversion. I think the Kardashians do this the best. And by the way, these are numbers that I have heard secondhand. I haven't verified them myself. So community notes disclaimer on myself right there. She has 300 million followers across Instagram. Her conversion rate is assessed to be something like 1%, which is like pretty insane, right? So if I am Kim Kardashian and I am selling a $1 widget, I'm going to make $3 million from a post from a $1 widget because I have a 1% conversion rate. So how do we look at the power of conversion? And that's where we see the power of audience, right? Where are you within their ecosystem that you're addressing their interests, their likes, their needs, their wants, their obsessions? And so when we consider that piece, we consider it being shooting fish in a barrel rather than fishing out of the sea, right? Because now you have a corralled, identifiable, data-driven audience. And you can assess your conversion metrics from those. So the price, it depends. You know, for Kim Kardashian at a 1%, like that's huge, right? But for somebody else, it just depends. And so that's where we look at when we also try to partner with entrepreneurs and partner with founders, because we want to understand how to give enterprise value. Like, sure, we'll give you the tools, we'll let you understand. At the end of the day, I can say with certainty that the majority of our portfolio companies, we have given more in enterprise value than the check that we have written. Quite literally in dollar to dollars.
Yeah.
True?
Yeah.
Yeah. So that's how we look at audience and the importance of conversion and being able to take those data-driven effects from it.
So 2025 startups raising money, what would be your recommendation when they look at VCs? Because, and I'm asking this question because, you know, it's money on the table and startups tend to make this mistake. I know we did it, to just take it, you know. But you might end up at some point with somebody on your cap table that's only on your cap table. But today, having so many options, how would you recommend for any startup to assess the investor that they're taking on board, so it's not just a check, it's more than that?
No, good question. I like to think of this in like a really kind of twisted way, in that like philosophers have had some of the like highest impact on society, but like they don't make money. You know what I'm saying? Like they have gigantic impacts. I read the Daily Stoic every morning and it helps me in great ways. It's just like a daily reminder of certain aspects of like a really interesting philosophy. So sometimes I equate ideas to a philosophy that a founder or an entrepreneur has. And it's like, okay, but are you going to affect somebody else's life big enough for them to pay for it? Like, are you really going to impact somebody's workflow, their lives, their family, their relationships, their headspace, their peace of mind, in order that they think, okay, I'm going to enter into an economic exchange to pay for this? And I think that's where you come with like these awesome ideas. And it's like, yeah, I just am not sure that it's a need. And you look at something like mouth tape, for instance, right? A whole slew of people are like, that is absolutely ridiculous. And then it was like, wow, it cures sleep apnea for a lot of people. It assists in like your nasal airway breathing. And they're solving an actual problem for these people, right? That you think on the philosophy side, it doesn't apply. So what I'm really like trying to say here throughout the entirety of this is make sure you have a problem, but make sure there is a customer and a need behind that problem. I mean, you think about that you want it, but you have to drive at that. Like that has to be why you live. It's not building a great product. It is solving the person's issues. It is making their life more efficient. It is doing faster, cheaper, lighter. It is taking, over an encumbrance that they're experiencing. But it's like, how am I serving this individual? Like serve that person. And then your product will naturally be built from it. We see a lot of amazing companies that build purpose-driven products. And that's essentially, like what Alex Jakowski was saying before from Sense. It's easy. I know exactly what verticals to start going into because I'm doing such a good service for the rest of my business that they're telling me what their other problems are, and it generates natural demand and product iteration.
So you guys offer a great value add because on top of the money that you give, you actually help out the distribution. But and I'm curious how you would recommend for startups to kind of do due diligence and pick their investors. So say you have a lot of options, how do you pick the ones that you work with? Yeah. Because for example, I know there's this thing that was popular for a while. I'm not even sure if it's popular anymore, which was media for equity type of approach, which I never liked from the beginning because it doesn't feel like you're kind of trying to replace the money with something else and it feels too transactional. Whereas when it's a value add, obviously it's better. So my question is, how would a startup be able to know if VC or angel or whatever partner that is about to offer them some form of cash can provide that value add. How do you evaluate something like that as a startup, or how would you suggest a startup looks at that space to know which VC or investor to pick?
Yeah.
Media equity, I mean, there's a lot of companies that, for example, own a few websites, and they'll tell you, if you give me 10% of your company, I will give you 10 million reach on my websites, and I'll distribute your product to this, and this audience.
Yeah. So
some people do. Yeah.
Oh yeah, a ton.
Yeah.
A ton of people.
Yeah.
And here's what I will say about that though, is that I don't think it's and like, this is not something we obviously do in the VC fund, but it's like, I don't think it's a bad thing, because if you understand, like if those 3 websites cover your avatar and they cover the entirety of the customer base you're trying to go for, then you look at from an enterprise level value perspective. Okay, if I give 10% of away from a $10 million company, so I give 1 million, and they're going to drive $2.5 million in revenue in my first year, and let's say at a 10x multiple inside of revenue for a seed to Series A company, okay, like that gives me that's a $25 million enterprise value addition. So I actually don't think that's ever the bad way, but I think it's like, so what, right? What if all of a sudden that you're advertising your business at a circus? It's like, that's not your target demo, most likely, unless like it's maybe insurance or like wild pet ownership. You know what I'm saying? So you have to think about like, how do you access the audience? And to talk about like how to diligence better from a perspective of what a VC, where they might be value add, understand like their experiences, understand their roadmaps, right? Understand where they've come from. If they have a sales leader on their team, or they have a person who's like going to obsess about go-to-market or LTV to CAC ratio, or if you're a hard tech company, about supporting and exploring your supply chains, and they have lived problems like that, I mean, that's incredibly helpful, because you have to remember you're entering into a legal binding agreement, which lasts longer than 30 to 40% of the marriages in the United States. Because if you're looking for a 10-year outlook, most divorces happen, I think, around the 7-year time frame, right? 50%, and again, community notes, I'm doing like back of napkin math in public on a Sunday. But you get what I'm saying, right? Like, these are a very long-term partnerships that you have to keep in mind. And so if you have somebody who's going to fizzle out within your first year, or they're not going to be helpful after the first 6 months, I would think twice about it.
Yeah. I just want to add from our experience, or at least the way I view it, is that another thing that we noticed after a while that can be a good filter if that will be a good partner or not is the questions they ask you. Because for example, we were talking a while ago with a VC, and we were explaining how good our CAC is, and they were like, yeah, I don't care about your customer acquisition cost. And that was a red flag for us, because why don't you care? You should care about that. Like, you should care. Yeah, exactly. That's our thing. And so yeah, I think that's also useful. Try to think about what they're asking you. If it's important to you but it's not important to them, that might be a mismatch of values or approach to the business.
Of course, just like in a relationship, right? Kids don't want to have kids, like, follow a certain faith. Like, those are things that matter. Yeah. I think that's it. I think that's time.
Yep. Thank you, everyone.
Thanks for sticking around for a long time. Thanks for the engagement.